Anyways, my name is Navin Prithyani. Good morning, good evening, and good afternoon to everyone. How many of you guys are here for the first time? Okay, any new members in here? Okay, some of you guys first time? Okay, good, welcome. First time at FX Street. Welcome. It's a really nice place. Lots of educational material here. So, topic was think like a banker. Yes, that is correct. Okay, we're going to discuss a mindset methods with how you're going to approach the markets when it comes to your mind. Okay, in my previous webinars that I've done here, or if you guys see me at other places, I've always discussed stuff how you approach the market when you're looking at it. Okay, but the real battle actually occurs in the mind. Okay, how are you really taking your approach to the Forex market? Are you able to pull the trigger based on certain decisions and stick to it? Do you move your stops? Okay, how many of you guys are guilty for moving your stops here whenever you place a trade? Okay, I know I've been guilty many times. Trades are running, I have my stops in place, and then just the last moment as I'm looking at the market, I'm like, well, maybe I need to start moving my stops. We have that issue. We have more issues coming in with risk to reward, over leveraging, whole bunch of factors that does not consist and get involved with a strategy. Okay, closing too early, that's also a big deal. Okay, letting your losses run more than your profits. Okay, so we're going to discuss a little bit of all of this stuff and find out what is the real reason all this stuff is happening and where in the cycle are you guys. Okay, there are different phases, and we're going to discuss the phases right now. Okay to trail. It's okay to trail. I would personally avoid it. We'll discuss that also. We'll go into that. I'll show you guys my screen, and we'll get some examples of trailing stop losses, mechanical and manual. There's a difference there. Okay, how does all this stuff relate to thinking like a banker? Well, a banker does just the same thing as you guys are doing. The only difference is a banker has a solid mind state because he's not worried about a small $1,000, $2,000 account. He's trading multi-millions, okay, whether he's a floor trader or he's a trader at a desk inside a bank. Okay, his whole objective is turning numbers. Okay, there is no emotional attachment to the money that he's playing or he's touching with. Okay? And the losses are not his, of course, yes. That's one of the biggest advantage he has, but it's also a disadvantage because when it comes to a large number of amounts, you deal with a large number of emails as well as service. So let's get straight into this. Okay. Here is the cycle that a trader goes through. Okay? Everyone starts Forex with a particular aspect saying that, okay, we have, it's a quick way to make money. I can sit at home and I can do this. I can quit my job in 30 days. I have a friend next door who's turned $1,000 into $10,000 in 5 days. It's just amazing. And everyone starts jumping into Forex like, whoa, hey, I want a piece of this pie. Okay? And that's how it all starts. Everyone gets in, the thrill and the success begins in the beginning. You're trading your demos, you're doing just fine. You're actually making profit. You have a live account. In the beginning, you're actually making profit. Then things start to take a turn. With poor money management, over leveraging, getting greedy, okay, losses start to occur. Okay? Losses start to occur to such an extent that more than 50% of the account is wiped, if not all of it. Okay? And once the account is wiped, there is one solution and one solution only. What do? I'm doing something wrong. It's no longer in my control. Let me educate myself. Okay? So then you start going online looking for every possible source to learn. Okay? You're reading books, you're attending seminars, you're attending services like signal services, trading systems. You're buying automated trading systems. You're doing everything in your possible power to stay on top. What happens? You incur further losses. The panic mode begins. We're like, I don't get it, you know. Even after all these knowledges, even after pouring all this money into everything I've done and all of my education, and still I'm getting nowhere. Okay? Once that phase is done, you end up back to the basics. Now, with a proper mindset. What is back to the basics? You know, if I actually put a trader, okay, if I bring a trader into my office and I put a trader who has 3 years of exposure to Forex, and I bring a kid who's just looking at the charts for the first time, do you know the kid is going to trade better? Okay? He has nothing messing with his mind. He's simply looking at the charts and says, oh, looks like it's going up. I'm going to buy. Oh, looks like it's going down. I'm going to sell. Why is that? Is because when he looks at the charts, he is not focused at the last candle like the rest of us. His focus is on the entire screen from left to right. He's looking at the big picture. Not looking at one singular candle and jumping trades, buy and sells. Okay? So you end up back to the basics with proper money management, proper mindset, and then you start making money, but slowly. Okay? You become steady. You start to accept that, okay, looks like there's not so much money to be made, because if you try to overdo it, you can also overdo your losses. So you start to realize and come to that conclusion that looks like I need to slow it down and not have an expectation of 1,000% in a day. You know, you start coming that back to reality. Okay, so let's proceed here. Now, how many of you guys are on, let's say, phase 2? Okay, where you guys have poor money management, bad habit of over leveraging. You have one loss, you over leverage on the next trade. Okay, how many of you guys are on phase 2? All right, I want you guys to promise me today, no more phase 2 starting today. You stick to your plan no matter what. Okay? Phase 3. How many of you guys are in phase 3 where you guys are trying to learn everything possible? And not only do you learn everything possible, but the moment something doesn't work, you change. You jump to the next thing. How many of you guys are on that phase? Phase 3. Where you are unable to be stable anywhere. You guys are jumping strategy to strategy, system to system. Okay? Remember, all of this stuff is not the strategy. It's psychological. It's psychological. How many of you guys are on phase 4 where you guys are starting to realize a little bit of profit, but you're starting to see that, hey, it's only 5% or 6%. It's not a big deal. It's not too much money at all. Okay? So we have all different types of people in here. We have phase 1 all the way up to phase 4. Okay? I'm going to discuss phase 5 at the end of the webinar, where I'm going to tell you guys when it comes to proper risk reward management, you will actually see there's a lot of money to be made in Forex. And I don't want to start you guys off going through the circle thinking that there's not much money and you guys should give up. No. Okay? Giving up is for people who belong in the 95%. Okay? They come in, they lose money, they put their hands up, and they walk away. Okay? And that is not for people like you guys. You guys are here because you guys want to get that edge. Okay? A lot of you guys are in this stage right now. This is why we're here. We're in this educate phase. You guys are trying to get that edge to understand what is it that's missing. Okay? What is it that's missing? All right. So let's move to the next slide here. The mindset. Okay, first and foremost, okay, this is my personal opinion, avoid scalping. Why? Simple mathematics. You make 100 pips, you give 3 pips in commission. How many percent did you give in commission? Okay, 3%. Okay, if you're scalping, you do 5 pips and you give away 3 pips. How many percent is that? It's a lot. Okay? 60, 75. So don't mess with scalping. The numbers just do not make sense. The numbers just do not make sense. Okay. I personally stick to higher time frames, 1 hour and above. Why is that? You get to filter out a lot of the nonsense from the news releases. 4 hours is just beautiful. It's excellent. You'll have one candle, it'll have a news release inside of it, it does whatever it has to do, and then it closes nicely. Yeah, less noise, right? Okay? Now, for those of you who do not know noise, it's just the matter of the markets moving crazily up and down. You know, that's what we're referring to as noise. Next thing, practice patience and avoid revenge. Okay? How many of you guys here are guilty of getting back at the market? Okay? You lose a trade and you cannot wait for the next day. You have to get that money back today. We've all been there. We've all been there. Okay? So you need to avoid revenge. You need to avoid revenge. You just need to say, okay, it's gone. Okay? Next thing, do not expect results on a daily or weekly basis. I get tons of emails all the time saying that, listen, I want to learn Forex, I need your training, but this is what I'm looking for. I'm looking for an X amount in every month, and then they put it in parentheses saying that this is how much it is per day. And this is my goal. Why is it that everyone's mindset is so fixed to per month or per day? Because we all come from a background of jobs where we get paid on a monthly basis, bi-weekly to a monthly basis. And that's how we evaluate how successful we are. How much do you make a month? Okay? That's how much you feel that, okay, this is a smaller time frame for me to adjust to, and it's all about how much do I make in a week or a day or a month. Okay? Next thing, trust your analysis. Okay, I will say this throughout the conference again and again and again. Always trust your analysis. Okay? Now, when you get into a trade, okay, if your trade is based on what you saw from the past, stick to your trade. If you entered a trade based on what suddenly happened, chances are you're not going to stick to your analysis anyways, because you're going to jump out of that trade immediately. Okay? Now, avoid trading moving data. Who can tell me what that means? What is avoid trading moving data? What does that mean? Yeah, trading on a running candle. Yeah, open candles. When the data is moving, you cannot conclude what the market is doing. You don't know if it's going to go long. You don't know if it's going to go short. You don't know if it's going to close sideways. You don't know if it's going to be a doji. You simply just do not know. But when you're back testing a strategy, are you back testing on the running candles? No. But when you trade, why do you trade and get so scared based on a candle that's moving? Okay, so learn to adjust your mindset that once a candle closes, that's my image that I have. And then I make an informed decision accordingly. Next thing, avoid holding on to trades longer than your analysis. Let me show you something here. Let me see if I can open up my charts. Okay, this is a quick little concept that will has helped keep me alive and should help keep some of you guys alive. All right. Now, if we are looking at this area and we see, okay, well, the market is in an uptrend, right? Market's in an uptrend, and I'm looking to buy somewhere around here because I see potential tails coming out, exhaustion or hammers or pin bars, whatever you want to call it, and you're like, okay, hey, I'm going long. Now, you went long based on what? This piece here. You looked at the market come down to here, and you're like, okay, I'm going long based on this, and my long view comes from all of this. So the overall direction you're long, but you made your decision based on this sudden pull into this area. How many candles is that? 1, 2, 3, 4, 5, 6, 7, 8. 8 candles it comes in. This is the hourly chart. 8 hours it takes to build up this area. So your visual, your eyes that you're looking at the charts with, visually you're seeing 8 hours worth of data to make this decision. And then suddenly what happens? The market goes long, and then it creates this big massive wick on top. I can assure you 80% of the people do go long here, but they panic at this area and they close. Okay? Focus on the amount of analysis you've done based on what it is that you've done, and focus on the run accordingly. Okay? Same thing. If you have 5 candles that took you to do your analysis and your trades are on the 10th candle, chances are now you're gambling. You're holding on too long. Okay? So this is a cool little trick to help you guys understand, am I holding on too long or too less? Okay? Does everyone understand that concept? Okay, good. All right. Can I repeat? Sure. You count the number of candles it takes you to visually understand that why am I going long from here? I do believe this is recorded. I'm not sure, Mr. Abraham. You see the market's coming down. You're like, well, we are in an uptrend. I do project this area to go long. That's my analysis. And my analysis is based on this pull into this area, which is 8 candles long. Why would I enter and exit just on 1 candle? It takes 8 hours to get to my area and 30 minutes to finish? That doesn't sound proportional. Right? It's like the market goes long for 10 years and then in 1 year it's dropped suddenly to 0. It gave everything back. Okay? Alright, so let's go back to here. Keep your risk simple. Okay, how do you guys deal with risk here? How many of you guys have a proper set hardcore rule when it comes to risk? Okay, let me hear the risk. What is everyone's risk here? 40 pips fixed. Okay, 40 pips stop loss fixed. 3%, 0.5%. Okay, let me ask you guys. Pan, why do you choose 3%? John, why do you choose 0.5%? Gabrielle, I'm guessing that's 0.2%. Why do you choose that number? Why are you guys choosing this number? What is the reason? Okay. Risk of ruining. Okay. All right. I'm gonna tell you a little trick that I like for you guys to understand. Remember this one thing, and this is how it helped me when I first started. If you're spending $100 a day, okay, you go out with your friends, you go out to eat, you go out to party, or you pay for your taxis everywhere. You're spending $100 a day, and no matter what your risk is in Forex, if you're losing $500, is that something you can handle? I want you guys to just be honest with me. If you're used to spending $100 a day, and now your risk suddenly is $500 or $600, even though that's 1% of your account, isn't that going to bother you? Okay, so don't just pick up your book that you read saying that, oh, the book tells me 2%, I'm going to stick to 2%. Yeah, but is the 2% something that will haunt you? You need to understand that. Keep your risk as close to your life as possible. If you're used to spending $50 a day and your risk is 30 or 40, okay, this is something you can see. If you lose that money, you're like, all right, okay. Okay? Okay, there should be a method to overcome this hurdle. Well, that's your hurdle. As you start making money at this same rate that you're used to, you can slowly increase. But if your average transaction in a day is $100 to $200, suddenly doing transactions on the Forex investment market of $1,000, $2,000 is just not logical, even if that means 0.1%. Because the mind is unable to process numbers that quick. Okay? You will be psychologically attached to your money. It's just natural. It's human nature. Can you increase the amount monthly? Is it fixed, or do you think it's too soon? Probably too soon. Too soon. Okay, watching live charts is like drinking Red Bull. Okay? Remember that concept as well. Trading based on live charts is dangerous. Okay? If you're looking at the live charts, you made your decision. You said, okay, the markets are going to pull back to this area. I'm going to go long. You set your whole analysis. Are you actually waiting for that pullback to that area, or are you sitting there looking at the market like a hawk? Okay, if you're sitting there watching it tick by tick, hey, it's gonna eat you, because that tick by tick is gonna give you trigger fingers. It's gonna ruin your patience, and you're gonna be like, oh, it looks like it's not coming to my analysis area. I have to go long now, otherwise I'm gonna miss it. Okay. It's my wife that is attached to my money. How often do you recommend to increase your lot size? Well, if you're stable and you're doing good for at least 3 to 6 months, increment slowly. Increment slowly. When you go up 5 to 10%. Don't suddenly go up to 50 or 100% increase. What time frame is live? Any time frame. Any time frame. Don't look at the current running candles. Okay, if you're trading the hourly charts, do your entire analysis based on what's already done, what's permanent. Okay, if it's not permanent, don't mess with it. Whatever you see must be permanent, so you can make an actual proper decision. Otherwise, it keeps running, and you don't know what to do about it. All right, confidence. Your trading style that you should have a pretty high success rate. Okay. My personal preference is 80% or higher. Why is that? Okay, because positive trades build confidence. Okay, I'm going to ask you guys this question. If you guys have 10 trades that you guys have taken last week, and 7 trades are in profit and 3 are in losses, okay, how strong do you think is your confidence in, like, oh, I can do this? Okay, you feel good. You feel good. Now, if you have 10 trades and 3 go into profit, 7 go into losses, but you're still overall in profit, how is your confidence then? Okay, wishy-washy. Yeah. The reality is the success is actually there. In the 3 trades out of 10. That is where the success really lies. Okay, this is an inside secret I'm going to tell you guys. It's not the number of winners. Okay, for your confidence level, yes, it is the number of winners that helps you keep going. But the reality is the success, when you reach phase 4, phase 5, the success comes from risk to reward. And when you have a really good risk to reward, you're going to have more losses than profits. Okay, you'll have like 3 good trades and 5 bad trades. But the fact is, the average human being is unable to wait until the end of 10 trades to analyze, did I do good or did I do bad? Everyone has this bad habit of seeing the trade that you took and you're like, oh, I'm doing good. Then immediately the second trade you take and you make a loss, you're like, oh, okay, I'm still 50 pips up. And the third trade you take and you make another loss, you're like, oh, I'm negative now. All right, this system doesn't work. What's next? You know, and that's how the normal person thinks. It's normal. You know, it's absolute. It's the whole cycle. All right, risk. So know your appetite. Know how you're trading. Keep it steady as much as possible, and consistency is key. Consistency is key. Now, thing we talked about is when you have your, do you mean open candles as live? FX Boyki, yes, yes. When I mean live market, it means running candles, the current candle that's running. I am trading your pro trading system, Joanne. Okay, okay. All right. Now, when you observe the markets, okay, one thing I always show people, when you observe the markets, never put your focus here. Okay, that will just keep you one-minded, like in one track. You know, see if you can look at the bigger picture and see, okay, if you can draw circles, you're like, where are my areas? Which direction is the market? You can clearly see we were in an uptrend, and then suddenly we dropped. We've had lower lows and lower highs. Okay? So now we see a shift in direction. A shift in direction. Okay? So always understand the flow of the market rather than, well, my current candle is bigger than the last candle. It's an inside bar, outside bar. It's an exhaustion candle. Okay, but in relation to what? Okay? I cannot say I am the strongest man on earth. Okay? For me to compare something, I need something to compare to. Strongest compared to who? You know, the skinniest man on earth? Of course, yeah, I'm stronger compared to him. Okay? But it all depends on, you know, what you're referring to. You have to compare and contrast two things. Okay, and the bigger you contrast it to, the overall image, the better you are. The better you are. Okay, now, one thing I want to tell you guys is the structure of the market. Here's what many people do. Okay, this is also psychological. Markets are going long. This happens, a big tail on top, or a wick on top, markets crash, all red candles. At this point, when they see this candle with a big wick on top, they're like, whoa, we're going down. They start selling right here. Sell, sell, sell. All the selling that's been going on, they don't see that I'm selling in the face of buyers. Okay, I'm selling in the face of buyers. I am not just entering at a proper location. If you actually look at the overall picture, you see this channel. Okay, do you want to buy in these areas? This last circle I drew with this box on it. Do you want to buy there? That's sucker prices. Now what happens is the market moves so strongly to these areas, people assume that, oh, it's going to keep going. I need to jump in now before I miss it. In fact, you should be more concerned on, is it going to turn from there? If it is, I'm not interested in selling. I am more interested in buying when it pulls back to the channel. The trend is upwards. I am not going to do anything but buy. I'm not going to be greedy and try to take these little sells as well. Okay? Because as you take a buy, the trades also have a potential to shoot. Okay? Do you trade the 1 hour with no indicators? Yes, most likely, yes. Sometimes I put in stochastics just to see some divergence. But that's the key. How many of you guys know divergence? I'm going to show you guys a little trick here. Are you guys aware of divergence? Okay, I'll plot it onto my chart, and I'm going to explain it a little bit. Okay, I'm going to show you guys how real bankers think. Okay, give you some things that we used to look out for in the bank in DC. Give me a second here. All right, I'm plotting simple divergence, standard settings, nothing else. Okay. I heard there's a hidden divergence, but that is new. Okay, MRC, don't worry about hidden or non-hidden. What does divergence mean to you? Just think of it this way, it means opposite. Okay? Whatever the markets are doing and the price is doing, the indicator versus the price, if it's opposite, something is wrong. Alright? Let's find you a divergence. Okay. Take a look at this area. In an uptrend, connect your highs. Okay, which direction is the market right now? It's upwards, right? Connect your highs. This is the way I do it. This is the way I was taught to do it. This is the way I do it. I don't know if this is the traditional way, but it doesn't matter. This is the way I do it. This is the way that works for me. Take a look. In an uptrend, connect your highs. So I'm going to connect my highs, let's say from here to here. I see it's an upward motion, right? I'm going to do the same area on the indicator. I'm going to do this. In an uptrend, I'm going to connect my highs. Are they both saying the same thing, that the markets went up, so did the indicator? Okay? Yes. They're both saying the same thing. There is nothing opposite here. Your focus is, where is there an area where we have something that's opposite? Okay? Let's find you one here. Okay. Alright, right here. Here's one here. The markets are going upwards. Okay? And then it crashes. Same thing on the indicator. It goes upwards and then it crashes. But our indicator is flowing upwards if we connect the lows. But if we do that on our price, it's going downwards. Okay, we have what we call divergence here, or opposite, sorry. Okay, I don't like to use the word divergence, I just call it opposite. Okay? Now, how does this whole concept work? Take a look, take a look. When I'm doing this on my screen, right, it looks perfect. It looks perfect, everyone's like, oh yeah, of course the market turned from there, right? Let me show you one thing real quick here. Take a look at this. Here's a high, market's going upwards, here's the next high. Does everyone agree? Okay, on your indicator, same areas. Here's the high, and here's that high over here. Do you guys see that we have an opposite? Yes? Okay, now take a look at this thing here. We have an opposite here. When did the opposite start? Okay, this is a downtrend here. And this is saying an uptrend. But when did this actually begin? If I put a horizontal line here, was my indicator ever breached above this line? No. If I put the same horizontal line on this circle, was my price here ever breached? Yes. The moment the price breaches and you start seeing halts in the market, this, my friend, is where everyone sells. Okay, that is where the 80% of the market sells in this area, because people know what is divergence. Okay, people know that. Well, so do the bankers, so do the hedge fund people. They know where the orders are placed. It's a simple strategy. Moving average crossover, you take any strategy. Pinpoint it, how you would actually trade this on a live market, and you would look at this area, say, oh, it crossed, it's higher, but over here it's not, and we're starting to see a slowdown. We're like, oh, I'm going to sell. Once everybody sells here, where do you think their stops are? Above your recent high. How far is above your recent high? 9 pips. Most people have their stop losses anywhere between 10 to 30 pips. Okay? So why don't we take everybody out, their stop losses. Once we take everybody out, buyers are going to kick in, saying that because the strong upward motion creates buyers saying, oh my God, it's going long. So let me get in before I miss this. Otherwise, I cannot buy my Ferrari tomorrow. So they'll start buying, the buyers right here. They start to lose as the market suddenly shoots up north, stops out everybody, and now there's buyers in here. And then the market tends to go in the original direction of the divergence. What happens then is the people who initially sold here, they don't give up. They actually think I was correct. It's just I entered wrong. I was supposed to enter here. And of course, the divergence was here, not down there. So that the assumption starts at, oh, I was correct. I just entered at the wrong area. See, the market did go down. I told you. That's the mentality that kicks in after that. Okay, and this is the concept that's applied to every single strategy. The most basic of basic strategies in the market available to you. Watch it. How many? I can tell you guys right here. Let's see. How many people are in this conference room right now? There are 88 people in this room. I want to see hands or yeses or nos here. How many of you guys take trades, you get stopped out, and the trade goes in your favor? Okay? I can pretty much guarantee this is going to be 90% of the room. Okay? This always happens. This always happens. Why? Is because everyone is entering at that same moment. Okay? The same moment. Why is this an area that everyone's selling? Okay, first there's divergence traders. Then stochastic traders, or stochastics, I don't know how to pronounce it, sorry. They look at this as an oversold area. Every single indicator is oversold at this moment. Everyone is selling around here. They're like, oh, it's getting ready to go. Candlestick formation people, doji, market turnaround, sell, sell, sell. Every Tom, Dick, and Harry is selling at this moment. Market shoots north, takes everybody out, and then it's time. And then it's time. Everyone understand that concept? In which candle would you enter to sell? The second red candle. This would be of interest to me. The first green candle, the last green candle, indicating a slowdown. First red candle indicating a turn. And then the second red candle, I would enter on a pullback as it pulls north as high as possible, because I'm interested in getting my stops above this first red candle. Not above the recent high, because the markets are moving. No need to put a risk too high. 10 to 20 pip risk is sufficient. Okay, but what happens is when you see a sudden spike happen, everyone's thinking that, oh, my broker, I hate that guy. Stop hunting. Everyone's trying to point fingers. You know? That's what normally happens. Okay? Similar to Euro USD current charts. Nothing quite yet. This divergence is not clear, or this opposite is not too clean. But similar concepts. The similar concept. Oh, daily. Sorry, daily. Okay. Markets are starting to drop here, and looks like it's going to drop further. It's going to go down to oversold area sooner. Okay, around here, it's going to go down to oversold area sooner. It's going to halt a little bit. It's going to shoot down one more time, and then it's going to go along. Always remember one thing. Retracements happen not in one leg. Okay, this is the structure of the market. Your market flows. Okay, you have one leg, a pull. Second leg. Okay, second leg is going to be proportional to your first leg, if not slightly smaller. Okay, so this one, your second leg is going to be like that. Okay, and then you might have, after that, you will have a test. A test which is unable to go that high, and then a fall. Or you might have leg 3, which will do a double top and then fall. But never on leg 1. Never sell on leg 1. Same concept is here. The markets are coming down. Where is the overall direction? If the overall direction is long and the markets are coming down, don't buy on leg 1. Wait for it to pull back a little bit, Let everyone interested buying saying, oh, this is it, this is it, this is it. Long, 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 long. They get killed, not too strong. It's going to be proportional to leg 1. And then you'll see a pull, and then a last try or a third leg, or last try, third leg, and it's unable to make those lows, and then blast. Okay, the trend resumes, and this is usually always going to be your 50, 60% areas if you're looking at if you're a Fibonacci person. Okay, so understand the flow and structure of the market. But before we end this webinar today, I want everyone to tell me that they will no longer be in phase 2 and phase 3. You guys will at least be in phase 4 and push to phase 5. No more will you guys hop strategies. No more will you guys take revenge and over leverage. Can I get a promise from everybody? Okay? Make yourself a deal that today my life changes, because you all know this is the problem. You don't need me to tell you this. You need to see this yourselves and feel it that, yes, this is the problem. I need to change this. Okay? Alright guys, thank you so much for attending the webinar here guys today. If you guys are interested, we do have a daily conference room over at forexwatchers.com. You guys are welcome to attend there. I am regular here at FX Street also with webinars and more insights. Thank you all for attending. Okay, I will see you all on the next webinar. Drew, yes, we do. We do. I'll type the site for you.